Hi everyone, Adam Witzberg, Primary Residential Mortgage. Thanks for checking into 2 Minutes to Sales as our monthly November market report. And with Thanksgiving rapidly approaching, I think the question that we're going to get quite frequently at dinner is going to be, how's the market doing? So I think there's never a better time to remind friends and family that you are in the business of real estate. And I thought I'd give you some information here to help you more accurately answer the question, how's the market doing? So let's take a look. Okay, 2 minutes to sales. Here we go. So first thing we might want to talk about is the top 3 reasons that people wanted to own a home in 2015. First was the opportunity to build equity. Second was people wanting a stable and safe environment. And third is the freedom to choose their own neighborhood. So in regard to equity, the average net worth of a renter in this country in 2015 was $5,000. Compare that with the average net worth of a homeowner of roughly $225,000. And you can explain that the average net worth of a homeowner is over 45 times greater than that of a renter. Those numbers are significant and definitely something to point out to people when you're in a conversation of whether they should or should not consider buying a home. In regard to a stable and safe environment, let's look at a survey from Rent.com in 2015 that said that 88% of property managers raised their rent in the last 12 months. 68% of property managers predict that rental rates will continue to rise by an average about 8%, and 53% of property managers said they'd be more likely to bring in a new tenant at a higher rate compared to negotiating with a current tenant. Okay, next statistic we want to point out, let's take a look at the increase in the number of first-time owner-occupied mortgages between 2014 and 2015 in the month of September. We saw a 20% increase in those types of loans, which I think really points to a significant improvement in the market overall. Let's also take a look at buyer traffic index from the National Association of Realtors, showing pretty strong across the country. Now in the Northeast it's a little bit weaker, but I think those of you out there would contend that it's been pretty good demand for buyers in the last few months. Let's compare that with our seller traffic index, and you can see pretty much across the country we have pretty weak seller traffic. So I think that points out there is a limited number of listings available, a limited number of inventory, which does make it pretty competitive out there for home buyers. Also, I think this points out, comparing our inventory levels between 2014 and 2015, you can see that we had a decrease over the last 3 months in inventory where we would have expected to be. So really we're seeing a decrease in the supply of the listings that are available. Now, in regard to the month's inventory of homes that are for sale, a healthy real estate market, we carry about 6 months of inventory of homes for sale. And you can see that since about beginning of 2013, we haven't had that 6 months of inventory. We've been significantly below there. So I do think that that points to a big opportunity for you to go out, try and attract some new listings, try and build up your listing pipeline for 2016, just because there is a limited number of those listings available today. Let's talk about our builder friends, family members, and possibly past clients. And I think builders are definitely an area that we can focus on for 2016 and 17 for growth. As you can see, we're well above where we bottomed out in 2009 for the number of single-family starts for builders. And in 2016, 2017, we're projected to go up to 1.2 million. So I think it's a great opportunity. If you have past relationships with builders that may have fizzled out a little bit, now would be a great time to reach out and try and rekindle those relationships, because I think builders are going to come back in a big way. Mortgage credit availability index is definitely up, so it's showing strength in the market. People's ability to get mortgages and get approved, it's definitely a pretty easy time compared to what it was a couple years back. And one thing we definitely want to be reminding our friends and family is that you don't need 20% down to purchase a home. The average first-time home buyer is under 5% down payment, and the average for all buyers in this country is less than 20%, right about 10%. So keep that in mind. Definitely a good topic of conversation, because the assets are definitely a barrier that a lot of people think they have when it comes to being a homeowner. Existing home sales in 2015, especially in the Northeast, we saw an increase of roughly 12% year over year for existing homes. So that's definitely a strong indicator things are moving in the right direction. We're moving more inventory than we have in years past. Existing home prices across the country were up about 6% across the board, which definitely is an indicator and positive thing that you can mention to your sellers, potential listings that you're talking to, is that the prices are heading back in the right direction. It may be time to reconsider listing a property. Pending home sales steadily increased in 2015, showing that there is a lot of activity in the market for both buyers and sellers. So pending home sale statistics have been strong as well. As far as mortgage rates are concerned, all the big indicators show that in 2016, we're expecting mortgage interest rates to head towards that 5% range. So this is something to be pointing out to people, is that rates right now are right about 4%, in the low 4% range. And it's a fantastic time to take advantage of those low interest rates and the market conditions. So you don't want to let people know that waiting, they could miss out on that, and homes could be more expensive just based on the rates that they're getting in the next year or so. The percentage of distressed property sales has continued to decline, which is an excellent indicator. From where we were, especially in 2012, we're right about 7 to 10% of total transactions are distressed properties, which is a more normal percentage historically. I think this is an indicator that we got rid of a lot of those short sales and foreclosed properties that were in the market, and that we're getting back, closer to normal, which is an excellent indicator of the health of the market, and hopefully something that'll attract a few more sellers into the market so we can increase that inventory and get you guys a few more listings. I hope that there was some good information in here, a couple good tidbits you can share with friends, family, and possible clients coming up the next few days. I want to wish everybody a very happy and healthy Thanksgiving. I want to thank you all for the business in 2015 and look forward to much more success and a lot of growth in 2016. So if anyone wants the slides emailed out to them, just shoot me a quick email. I'll be happy to send them over. But happy Thanksgiving. Look forward to talking to everybody soon. Take care.